Good morning. It's Monday, December 4th. You've got 80% energy, Gary. 80% energy, Gary, because I still don't have a lot of energy, but I sound better. I'm going to go out for a walk. It was a rainy weekend. Good football games this weekend. The Giants were on a bye. The Giants play Monday night next week. I think they play Green Bay. So I might actually go to the game. I was looking on Ticketmaster. It's like $35 for a ticket. So I might actually go up to the Meadowlands for that one. But let's talk about the S&P. It is 4.2% away from all-time highs. The previous 14 times it went at least a full year without a new high, then finally made one. A year later, the S&P was up 13 times, nearly 15% on average. So I'll include that chart in the newsletter. If you're not subscribed to the newsletter, I suggest you subscribe to the newsletter. There's a couple of things. Anything that you're going to hear link-wise, the link is down below, link linktr.ee/daily stock pick. You'll see it on the video. This is where you're going to go. The newsletter is right here. It's on Substack, dailystockpick.substack.com. It's free. During the week, it's absolutely 100% free. It shows up in your email box around 12 o'clock, maybe 1 o'clock, depending on when Substack wants to send it out. But I write it right after this, so it does match the podcast. So if you can't listen to the podcast, the newsletter is a perfect accompaniment to it, because you can just scan it and see what you missed. But I'll include a chart that shows you the previous times that the S&P was up like this, and it'll include also a chart from Tom Lee. And FUNDSTRAT said, here's a note. As we look towards markets into year end, we see a zigzag, but ultimately a rally towards S&P 4750 to 4800. We are dip buyers in December along the zip tag. So remember, SPY trades at 1/10. So you basically, when he says 4750 to 4800, he's talking about 475 to 480. That brings us way up. I mean, let's just look at a weekly, because there you have, this is 455, and I said that's kind of the support and the resistance line. If we get above that, this is the 480 mark, and we're not too far away from that one. If he's buying the dip on this one, then today where you're at 455, you're down 0.73%. You're just below this yellow line. Like I said, it's going to provide some resistance there. But if they're buying the dip and you're buying long-term, buy the dip. I'll include that in the newsletter so you can see that chart. The other thing that I'll include in the newsletter is this. This is, if you don't have Webull, you're out of your mind. Go to the link tree right now. If you don't have Webull, go to the link tree and click this third link. Join Webull and get 20 free stocks. You'll get free stocks. But Webull is an absolute, or I should come back to this. Well, we'll come back to the link tree, but the third thing. But what you can see on the screen right now, the economic calendar, this is an email that I get every Monday from Webull. And it includes Broadcom Thursday. It includes Lulu earnings on Thursday and AZO on Tuesday. Those are the three things. It gives you everything that you need to lay out your week. And again, this link tree right down here on the third link. Join Webull. I put $1,000 in there in January, and I am up to, let's do live check on Webull. I am up to, we got to get out of that one. I think it's $3,030. $3,030. Large majorities Apple. I wrote in the weekend newsletter about how I've traded stocks in Webull rather than betting on football. I've done significantly better because year after year betting on football, I wound up losing money. It was never big money, but I'd put $250 in. I'd get a $250 match. And by the end of the year, I was at zero. So I also get Seeking Alpha. If you don't have Seeking Alpha, I would use the link on Linktree and go and sign up for a free one. You don't have to pay for a large part of it. I get the paid one, which means I get an email based on the core portfolio. The core portfolio, you get a health score, 3.69. I use this. I am planning on doing a video about all of the things that I use in Seeking Alpha. I don't know that I've done a great job in doing it. I've gotten some really good feedback from people that have signed up for Seeking Alpha, the premium version, and they really like it. The core portfolio one, I actually like. This weekend as well, I was looking at the top ETFs and I was trying to groom, okay, which ones do I think are actually really good for the new year? So I'll have a list out. Keep an eye out for it. But Seeking Alpha, I love that email. So I'll include that in the newsletter as well. The other thing in the newsletter that you're going to see is with less than 1 month to go, I have a list of the top performing stocks in 2023 with the largest market caps. And so it includes Apple up 47%, Microsoft up 56%, Google up 49%, Amazon up 75%, Nvidia up 220%, Facebook up 169%, Berkshire is up 15%. It's just doing great. And it's got every large cap stock. Nike is down 3%. T-Mobile is up 8%. Pinduoduo up 78%. It's not one of the largest stocks, but it's in this list. So I've got that list. The other list that I'm going to include is the S&P sector list year to date. Number one performers year to date, technology, XLK, 46.4. Communication services up 41.5. Consumer cyclical up 28. The ones that I wanted to focus on are the ones that I think have opportunity, and it's energy up 2% year to date, and it's utilities that are down 9.3%. And if we go and look at we look at those two, so XLU, we had a cross up on XLU. XLU. So we had a cross up on XLU, which indicates that we have a little bit more of a bullish run. I don't know that I'd necessarily trust it, but you are holding this 200-day. And if we look at a long term, and you're a big believer in XLU, I drew this range right here a while ago. Probably, let's see. It goes all the way back. And yeah, well, I can't move the chart right now, but you can see we're in the bottom. And I think if you look at the death cross right there, it might continue to point down, but utilities were basically down because bond rates were so high. And utilities are used by Walter, the guy who sits in his chair, talks about the good times with a blanket draped over him. And that's the dude who invests in utilities. So XLU might be an opportunity. Great list. There was a tweet that I saw, and if you're not following me on Twitter, you can follow me on Twitter. I actually post a lot of pretty good stuff on Twitter. Like Palantir stuff, and here's a douche on the internet who tells you to buy a $100,000 car instead of your $30,000 car because his appreciated, blah, 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 whatever. There's a lot of good stuff in my Twitter feed, so you probably should follow me on Twitter. But I did find a great tweet, AI, the thematic stocks of what to really invest in. And like AI, Microsoft, Snowflake, MongoDB, Palantir, ISRG, Intuitive Surgical, cybersecurity, CrowdStrike, Zscaler, PanW, Net, for SaaS services, CRM, Datadog, ServiceNow, Axon, Team, CLFT, IoT for Internet of Things, AdTech, Meta, Trading Desk, and Google. So there's about 7 or 8 different sectors, and I posted the top ones in there. There's a great list by this particular person. His name is Brian Stoffel, and this list. I'll include this link so that you can read it. He's got 19 stocks in his portfolio, and he does just a fantastic job with absolute just precision why he owns them, where he finds them attractive, and where he's currently holding. And what his prediction is for each of these 19. This is what you want to look for. Don't look for a dude who's saying, hey, I think this one could pop 30%. You look for dudes like this, like Brian Stoffel, who puts in the research, who does this kind of thing and says, hey, it's a great one. Josh Brown, the Reformed Broker, is done, but he does have a newsletter. The economy is like the human body. Let it heal. I thought this newsletter was absolutely fantastic. So I'll include a link to that in the newsletter as well. I think you should probably subscribe to his newsletter. I like it. Also, I'll include a link. TrendSpider has a new indicator. It's a per session volume. So I've had hundreds of people sign up for TrendSpider through this podcast. So if you're listening, this is a great, I looked at it. I played with a little bit. I don't think I have it quite dialed in yet, but you do import it. And they go through in this blog exactly how it works, how to use it. I've got it on one of my other screens, my work areas on TrendSpider. So I'm still trying to lock it in. Let's talk about Alaska Airlines. Alaska Airlines is set to buy Hawaiian Airlines for $18 a share. And I want to point out Hawaiian Airlines is right now trading at $13.23 per share. That is up 173%. HA was trading for $4.85. This, again, they are going to be outside of this chart. We're going to need to pull this one down a little bit because it's going to be even above this. I mean, let's look at a long term of this one. And you can see $13 is right about where it topped out back here in July at the highs. And that's where it's trading at right now. But $18 is way up here at just above the 200-day. The reason it's not trading at $18, even though Alaska is going to pay $18 per share for Hawaiian Airlines, is because there's a concern that the Justice Department and the administration or whoever does these airline things, I don't even know which part of the administration does it, but the administration has not been very friendly to purchases like this. So you could, it's kind of like, remember we talked about Activision Blizzard when it was in the 60s and 70s, but Microsoft was buying it at 95. And Warren Buffett said, yeah, I think it's worth the risk just to see if it goes through. And there were tons and tons of fluctuations in that between 75 and 90 and blah, blah, blah. Well, if you had the balls to stick it out and you held on to that, you wound up getting $95 per share. So it's kind of a good one because they do announce per share. It's different than the PXD purchase by Exxon, where you're getting like 2.33 of Exxon for the purchase. As Exxon goes down, PXD will go down. So it's just a bit of an arbitrage kind of thing. You can hold on to it if you want. I'm still holding. I like the dividend. I just don't think that, there's any risk of that one not going through. Now, 22 countries committed to triple nuclear energy capacity by 2050. This made all of these nuclear energy stocks just soar. You can look at if you want to start a list of nuclear energy stocks, you can absolutely start a list of so I'm going to include this article in the newsletter. So if you're interested in nuclear energy and looking at that stuff, I think it's a great opportunity to take a look at some of those stocks so you can track them. I didn't take a look at them. Uber is included in the S&P 500. We talked about this one. It was up 5%. It's up at 60. I would expect this to probably put in some type of top here at about $60 and pull back maybe a little bit. You're seeing back here where it was at 60 back in 2021, at March 2021, when it was at its all-time highs, I believe. Was it all-time highs? I don't know. Let's see. No more data. Yeah, that was pretty much all-time highs back here at 60. I would expect it to pull back a little bit here. I probably am going to trim some of my position, but any pullback I'm going to be adding to this position. Look at how far it is above the 200-day. You just had the golden cross on the week. So Uber did get into the S&P 500. One that didn't get into the S&P 500, but it was a long shot, was Palantir. We're back under 20. It's down 2% in the pre-market. It's at 1972. So take a look at those two. If you have them in your portfolio. Now, onto the social request. But, I did want to point out, Tesla got into the S&P December 21st, 2021. And so if we go back December 21st, 2021, I'm going to look at a weekly, and we'll go back to December 2021 for Tesla. Let's take a look. December 2021, I'm going to start it right about there. Okay, December 2021, in the lead up, it kind of got there and it got to its all-time high. You haven't really gotten to that. So it's a little iffy whether you will get Uber, even though it's included in the S&P 500, whether it will this will be the last bump that we have, or long term if Uber continues to go up. There's a little bit of difference between Tesla and Uber. Tesla has had a bit of a problem with some of its cash flows with the margins declining, but Uber tends to have the margins increasing. So I don't want to say it's apples to apples. It's more like apples to maybe applesauce. It's a little bit different. So just be aware of that. I did want to bring that up because I did hear that. Now, Zach asked, Pfizer seems like an overreaction on Friday based on their crappy obesity pill, but it's been a solid company for a long time, and a 5.7% dividend is nice. Pfizer is one of those ones that I own, and I think I still own it. I didn't get out of it, and I should have at 40 and 50. That was my fault. Is I just didn't think that a solid company with good earnings and stuff like that would get wrapped up in this. The problem that they have is that they are wrapped up in COVID, and this is a COVID-defined stock. And I have a problem. The CEO in particular, who said that their vaccine cured the disease early on. And yes, I know science was still evolving and blah, blah, blah. But as more information comes out, he knew it didn't cure. He knew it was like the flu vaccine versus the smallpox vaccine and things of that sort. I just, I wonder what they're going to do, because I think they were pushing that weight loss drug, and they were pushing that, rather than a shot, this is a pill form and blah, blah, blah. And it just didn't work. So what else are they pumping up? And so that's what worries me about Pfizer. You're right. I mean, for a 5% dividend with the amount of drugs that they have in the arsenal, not a horrible thing. They're down 43%. The average target price is $39. UBS resumed coverage with a $34 price target. I just don't, the amount that it has to run and it has to overcome in order to run that much. I think there's better places in the market. And I think there's better drug companies in the market. And that's why I don't have Pfizer in the core portfolio. That's why I have Eli Lilly in the core portfolio. I think Lilly is doing it right with the drugs. I think they'll come out with a pill form of Ozempic or whatever, whichever one they have. I think they'll come out with a pill form of it. And I think they'll do better. So, Zach, I agree with you. I still hold Pfizer, and I probably should get rid of it. I trimmed a good amount of it. But I just think it's wrapped up in that COVID. For me, it's just kind of it's okay. Veritiv, VRT, has made 12% in 3 weeks. As the song says, should I stay or should I go? VRT. I mean, this is, if you've made 12% in a couple of weeks on this one, for me, my goal is always like 10%. And if I still have confirmation, I'm still holding. This particular one, you still have confirmation over the 9-day. In pre-market, you're down 4.81. VRT, I know nothing about this company, so let's take a look at it on FinViz. Market cap, $17 billion. They're making $254 million. PE is rather expensive, 69. It is an electrical equipment and parts company. It is up 230% year to date. It is at 1% below its 52-week high, which I believe would be an all-time high. We can take a look at a weekly. So, I mean, it's expensive. I don't know that I'd necessarily wait for the hammer to fall on this one, but everything that points is pointing up. So your RSI is at 73. At some point in time, it doesn't mean now. It doesn't mean anytime soon. But if they don't continue to grow, it's going to fall. Let's take a look. Yeah, most recent is sale, but that was September at 37. I mean, shit, this one's at 45 and these guys are selling at 37 and they're selling big. This direct, they sold 10 million shares for $375 million. This dude at 34 in August, director, VPE Holdings, these guys have sold 30 million shares. Philip O'Doherty sold a bunch at 24. For me, I don't look a gift horse in the mouth. Make sure that you're just watching that chart. Schmagoogle. You think it's any chance of XOM bounce to 105 this week? XOM is Exxon. And if you've been watching Exxon, we'll go over here to Exxon because remember, there were huge insider buys on Exxon for a while. We've had huge insider sales, $216 million. This guy, Jeffrey Urban, was buying this up at 106, 106, 105. He just sold $216 million worth at 104. So I don't think he's taking a loss. I think these are long-term gains that he's looking. Hasn't told anybody why he sold, but huge insider selling. Now, the average target price on this is still 128, and it's recent. I mean, it's all 223, 2023, that price. You're down 6%. It's got a 3.6% dividend, a 10 PE on forward as well. As long as oil continues to stay down, Exxon will go down. Exxon is down 1% at 101. I think 100 is where it wants to stay. I personally, if you're trading this one, I wouldn't trade this one. You have no confirmation. It's below the 9-day. I think there's better places to trade in the market. If you're sitting there wanting to hit 105 on Exxon, there's got to be some reason. And for me right now, with the supply that we're putting out here in America, with the supply cuts that Saudis and OPEC are trying to do to drive the price up, with demand in China going down, there's better places in the market. Again, better places in the market. The next social request, DPST, that may be one of the better places in the market. Morris, DPST up big on Friday. Am I chasing? It's got a big gap to fill. Yeah, we've got a gap to fill, a gap up here to about 78. If you look at DPST, and I want to point this out, this is a triple levered ETF on the regional banks. And regional banks took this hit back in March, and you saw it go from 266 down here to 42. Then they had a reverse split. And the reverse split was because this was at like $4, $1, and it has to remain above $1 to remain listed. So these triple levered ETFs, which are decaying assets, these are not investments. These are trading tools. These basically lose value because they play options. So when you invest in them, you're investing in a trade. Are you chasing? Absolutely, you're chasing, because just a little bit ago, at the end of October, we were down here at 40. This is a 94% gain to get to where you are today. 94%. Now, I put this yellow line that you see right here in a while ago. I said that's where the trend is going from March of last year, where it just kind of I needed 3 points for a trend line to be true. You need at least 3 points. The more, the merrier and the better. But you see, we had 3 points on the upside there. And this was where the downside goes. So I said, if you're looking at the trend, that's where you have to go. The problem is your 50-day is still moving negative. Your 200-day is still moving negative. Your RSI is in no man's land at 50. If we look at the algorithm on this one and we see, okay, how do we do on the algorithm? The algorithm loses you 66% on this, whereas if you bought and held 2 years ago, you'd lose 84%. If we go to the 65-minute algorithm on this, which just uses an 8-day EMA, you make 10% on this, and you get in and out. Let's see, positions 92. So over 8 months, you had 92 positions. 33% are winners, but you make 10% versus just buying and holding. You makes 5%. You can see right here. Let's see, are we in or are we out? let me pull all of these, remove all annotations. We're going to pull those out. You're in. I mean, you were in here at 63. So it got you in last week on, looks like December 1st. So Thursday, maybe. December 1st, it got you in at 63, 65. So this is during regular hours. It was now. You still have confirmation. Are you chasing it? Absolutely. Absolutely, you're chasing it. But sometimes it makes sense to chase. I don't know that I'd necessarily chase this one. The RSI in the 65-minute, it's at 76. Your MACD is crossing up. It's kind of a little high. It's probably got to come over. So I don't know that I'd necessarily chase this one. For me, again, I'm patient. This market is kind of nuts, and you're seeing a pullback. Where would I rather go? Well, Meta is pulling back to 316. This is down 3%. The algorithm, the 4-hour algorithm has you out after a 6% gain. But I'd say if you get to 311 today, pull that trigger. You're at the 200-day. I'd pull the trigger on that one. Google, you're almost under $130. I don't think Google has anything to fear about. So long term, I'd rather have my money in that stuff and wait for DPST to actually give me a sign that you can go. One note. If you guys have been listening for a long time, I did a FIRE podcast, FIRE with Gary, and I put that in the newsletter. But one of the biggest things that I've said, FIRE is really easy. And FIRE is financial independence, retire early. It's what I did. I followed it unknowingly. I followed it. And there's basically anybody that teaches you FIRE, there's nothing to teach you. It's very simple. It's income and expenses. You have to maximize your income while minimizing your expenses. And the investment part of this is making sure that your money's working for you, and it's not working against you. So it's very simple. But one of the things that I said was, hey, mint.com is the way I track all of my expenses and my net worth and everything. I've been using Mint for years. Well, Intuit announced that it's going away. So I've been starting to use Empower. And I'll have a link for you, but Empower is the closest one that I've found. It's not as good as Mint in my mind, but it's not as bad as the other ones. It's free, and that was my number one thing, is that it's free. So I really, really think that if anybody followed my FIRE podcast and wants this, I'll include a link so that you can get Empower. Empower is a solid tool. I really, really like it. So use that one. And now let's look at some scans. One that I found that crossed up on Friday, Cleveland Cliffs. It is said that Cleveland Cliffs is probably in the one that will get U.S. Steel. And so this is, the union wants Cleveland Cliffs to get U.S. Steel. This will greatly benefit Cleveland Cliffs. Plus, Cleveland Cliffs increase the price of their product. And they've gone through like 3 or 4 price hikes, not seeing a decline in any of their demand. So again, they're just a company that raises prices, that is able to consolidate and bring on more capacity. That's a company you want to invest in. I think this is a $30 stock. I'm in at about, I think 16, somewhere in that neighborhood, all in. So Goldman Sachs, GS, this is in the core portfolio as well. This is one that the RSI is a little bit high if you're looking short term, but we just crossed the 200-day. I don't think you have anything to worry about buying Goldman Sachs. It's another leg up. I'm not in Goldman Sachs. I have Morgan Stanley. I have Bank of America. I have Wells Fargo, and I have Citibank, I believe. I have several others, but Morgan Stanley or Goldman Sachs, I put in the core portfolio. It's a solid winner. And I've said $300. Anytime it approaches that $300, I think you should get in there. If you really want to know Goldman Sachs, the book value here from FinViz is $313. It's $313. So $348 is the price right now. It's a little bit extended, but I like it. Another one from the core portfolio that gets you in is Roblox. This one has just been on a legendary run here from 27. So the algorithm got you in September 27th at 27. You've had a couple of opportunities to trade around 30 here. Now you've had a couple of opportunities to trade around 40 here. Remember, those handles are super, super strong. As far as the volume goes, I think you have some pretty good volume shelves here. If we pull this back to some highs and we see where are people holding, they're holding up here. Your stop loss should be at 37 because you really don't have any volume between 30, 32, and 37. But anything under 40, I think you could take that one for a little bit of a ride. Morgan Stanley. This is one that I personally own, and it's just coming up on its 200-day. So you got here at 70. I think it's $90 stock. I think it's a good one. Some of the energy names, ARLP. Boyle, interestingly enough, got a cross up. And I'll include all of these in the newsletter too, by the way. But Boyle got a cross up here at 36.60. Is it time for natural gas to get a bump? You're down 6%. I included an article last week about how natural gas, we're pumping out more natural gas here in the U.S. and we're able to ship it across. And there's not much need for natural gas, so the supply is really outweighing the demand. So Boyle, a little bit of hard one there. Halliburton, this is a solid energy name. If you wanted to get into energy services, this one at 37, I don't think that's a bad price. You're under the 200-day. Your 50 days kind of taking a little bounce. If energy is going to continue to move up, Halliburton will continue to move as well. You're just getting to your ex-dividend date. SCO. Oil. SCO is the levered ETF against crude oil. It is triple levered. So it is one of these that's a decaying asset. You don't want to stay in it. 1964 is the cross up here. And we just got out. Nice 13% gain there. You bought in October 26th and you got out November 22nd. So 1 month, solid move. You're above the 200-day. Typically on these stocks, you don't want to be above the 200-day, but that golden cross is happening where the 50 days crossing up. So we got that one. Albemarle ALB, one of the levered ETFs, UMDD. UMDD is the Ultra Pro Mid Cap. So this is the bull of the Ultra Pro Mid Cap. Now you've been in this since October 31st at $14. It's at $19. It held above the 200-day. Your 50 days moving positive. There have been talks about mid caps and small caps being the ones that will make the next big move. So solid move on UMDD. Some of the ETFs that got the sectors, XLF. XLF has been in a legendary move. You're up here at 32, down October 31st. You're at 36.25 right now. And it's positive for, it just moved positive. So XLF is one, XLP, XLU, XLI. We went over all that. Citibank, General Dynamics, AIG, GE, FDX. So there's your scans. I'm going to get out of here. Before I go, just remember there is still a Seeking Alpha sale. You can get it for $50 off. If you want TrendSpider, you can get TrendSpider right here. Go to Linktree, linktr.ee/daily stock pick. And you can just click on that link, sign up for TrendSpider. It is under $400 still. If you use that link and you go up here to the top and you go view plans and pricing, you can see the middle one, Elite. This is the level that you want for my algorithms. It's $397 for the year if you prepay. If you want a 7-day free trial, that $300 and under $400 goes to $780. It's a significant if you want the trial. If you want to do just monthly, it's $70 a month, $79 a month, but you do get a 7-day free trial. So the yearly prepay is absolutely the 100%, the best one to go in. You still got 15 hours on that one. That again is that first link of on TrendSpider. If you want Seeking Alpha, it's the second link. I use Seeking Alpha every day. I absolutely love Seeking Alpha. I think the premium is absolutely worth it. I think it's $170, $180, somewhere in that neighborhood. But you do save $50 if you use this link. Webull, like I said in the beginning, if you're not trading on Webull, the app is phenomenal. I use it as a sporting bet. TQQQ, SQQQ, all of those little triple levered ETFs that I include in the TrendSpider list. So when you sign up for TrendSpider, you get all of these lists. It's core investments, covered call ETFs, energy names, the levered ETFs. That's the one that I use. All of these, it's DRV, DRN, TQQQ, UPRO, all of these you can scan on and use if you'd like to sign up for TrendSpider. Then you got the Daily Stock Pick newsletter. This is free every day. Like I said, you'll get all the lists that I just went over in this podcast. If you are paying anything more than $25 a month for your phone service, click on that link. You will save $20. So your first month service is as low as $5. I have the $25 a month service. It is deprioritized data. I don't even notice that it's deprioritized data, but if you don't want that, just go and pay $35 a month. I know tons of people who are paying more than $35 a month. There's no reason for it. And again, that's part of my Fire podcast. If you're going to order a Tesla, order it here. If you're going to, look at AT&T fiber for your house, look at it here. Savvy Trader, I'm not really promoting that. I'm not sure where they're going in a couple of weeks, but if you want to follow my trades on there, you can do it. YouTube Live. If you make money, I don't charge you guys for stuff. I do make money off the affiliate links, but if you want to just pay me because you made some money and you want to say thank you, it is the season of giving. Venmo, PayPal, and Cash App right here. And again, if you want to buy Webull down there. If you don't have one of these things, sign up for Venmo right down there. Just use that link and sign up for Venmo. If you want to get to any of the social platforms, they are all up here. If you want to get my algorithm, remember when you sign up for TrendSpider, what you have to do is sign up first. Then you go to this little mail thing and you email me. I will mail you back everything that you need. It's basically an import process. So any questions that you have, you can email me, hit me up on the socials. The Facebook group, it is private. So, you can ask me for any of the stuff that you want in there. Okay. I will see you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.